Have you just finished or you're about to finish your IVA and now want to get on the property ladder? Whilst an IVA will certainly make it harder to find a mortgage, it's not impossible. Join me for this ultimate guide to getting a mortgage after an IVA. We'll also look at the effect an IVA has on your credit score, how you can rebuild your score, how to improve your chances of finding a lender, and how specialist lenders may be the solution that you need. Just to be clear, I don't give financial, legal or mortgage advice. I'm just making sure that you have access to the information that you need to make informed decisions. First, let's talk about how an IVA works and how long it affects your credit report. An individual voluntary arrangement, or IVA, is a formally and legally binding agreement between you and your creditors, which states that you will make monthly payments towards your debt for an agreed period of time. This period usually lasts for 5 years, and you'll only be required to pay an amount that you can afford. Basically, when you enter an IVA, you agree to pay any money in your bank account that's in excess to your living costs, and you pay that to your insolvency practitioner, or IP, at the end of every month. Your IP will divide this amount between each of the people you owe. These payments usually continue for 5 to 6 years. During the 5 to 6 years of your IVA, the insolvency practitioner will keep a close eye on your finances to give you debt advice and plan how your creditors should be paid back. If you're curious about how much money you'll have to live on with an IVA, then check out the video linked at the card at the top of the screen now. Once the agreed upon time has elapsed, any remaining debt will be written off. One great advantage of IVAs is that they are flexible and affordable, allowing you to get a significant portion of your debt written off. Additionally, an IVA obligates your creditors to freeze all interest and charges on your debt, saving you a lot of money in the long run. However, IVAs may not be suitable for everyone, as they are difficult to get approved for. Your creditors will have to agree with the terms of your IVA for it to be put in place, and they're under no obligation to do so. Furthermore, IVAs stay on your credit file for 6 years, even if the IVA itself only lasted for 5 years. This may impact your ability to obtain credit for up to 12 months after the IVA finishes. Improving your credit score. There's no getting away from the fact that an IVA will hit your credit score hard and make it much more difficult to obtain a mortgage. When you enter into an IVA, a record will be made on your credit history and your credit score will be lowered dramatically. Additionally, any mention of an IVA will likely put off many lenders. Mortgage lenders look at your credit score and your credit history to work out how much of a risk it would be to lend you the money that you're asking for. Obviously, if your credit score is particularly low, this is going to make getting a mortgage even harder. The good news is that many people have successfully completed their IVAs and gone on to be homeowners by working to rebuild their credit score over time. Let's look at some steps you can take in order to recover your credit after an IVA. Get your IVA completion certificate. After your final year of IVA repayments, all unsecured debt is wiped and you become free from the IVA and from your debt. You should also receive an IVA completion certificate. This is your vital final proof that your IVA has ended and all your old debts are clear. If for any reason you haven't received that certificate, then it's vitally important that you get in touch with your IVA company straight away. Check your credit report yourself. An IVA stays on your credit file for 6 years from the day that it was started, so don't be surprised to still see a note about your IVA on your credit report even after the IVA is ended. However, mistakes can occur, so even if it's been 6 years, it might still be worth checking that the IVA has been removed. You can also check your report to make sure that all the debts cleared by your IVA have been removed or at least marked as complete. Pay all your bills on time each month. During and after your IVA, it's vitally important to always be showing that you are able to keep up with your bills and payments. Try to always make sure you have plenty available to cover all of your essential bills and your direct debits each month. You should really take your time to budget so that there is some surplus each month after your priority bills. And be tough on yourself about non-essential purchases and non-essential subscriptions. Take out some credit. Your credit report measures how likely it is that you'll repay your debt. The best way to demonstrate this is to actually take out some credit, being sure to pay it back promptly. Your options right after an IVA will be limited. However, smaller unsecured debts like a basic credit card or a small mobile phone contract may be available to you. Starting with these small things and being sure to pay them off each month will demonstrate that you are reliable with repayments and should eventually help to raise your credit score up. However, you need to avoid any bad credit, Payday loans, buy now, pay later schemes, and even just a bank overdraft can have some of the worst interest rates and late penalty charges. If you want some more in-depth information about improving your credit score after an IVA, then check out this video linked in the card at the top of your screen now. Finding a mortgage after an IVA. As mentioned, the presence of an IVA on your credit report can make it difficult to apply for a mortgage, especially if it's relatively new. You may come across lenders that refuse to lend to someone if they've ever had an IVA listed on their credit report, regardless of whether it's still valid or not. On the flip side, you might find lenders that are willing to consider your application for a mortgage, but only after your IVA expires. Even if you do manage to find a mortgage lender willing to lend to you, the interest rate you receive is likely to be higher than if you waited until your IVA was removed from your credit file. So in this situation, patience can be critical. It's advisable to wait until your IVA has been erased from your credit file before you start looking for a mortgage. Not only will the process of finding a mortgage be less stressful, but you'll also be able to secure a lower interest rate. The longer it's been since the IVA ended and the better you've managed your finances, the less severe the impact will be. However, if a mortgage lender asks if you've ever used an insolvency solution, specifically an IVA, you should definitely tell them the truth. You must do this truthfully, even if the IVA was completed long ago. You'll find that your chances of getting a mortgage may vary depending on how big of a deposit you're willing to pay. The larger your deposit, the more equity you own and the less of a risk you appear to lenders. Some creditors may ask for a much larger deposit than usual based on the fact that you've had an IVA. There are no legal restrictions on applying for a mortgage right after completing your IVA. However, it's essential to understand that mortgage lenders will consider several factors before approving your application. In addition to the amount of deposit you're putting down, there are three main factors mortgage lenders look at. The first thing they'll look at is your income to expenses ratio. This ratio is a prime indicator of your fiscal responsibility. If they find that your income is much larger compared to the amount you have to spend on utilities and other expenses, then they'll be more willing to loan to you. The second thing they'll look at is the source of your income. They'll want to assess how stable the source is and how much it can potentially vary over the coming years. A mortgage loan requires long-term financial stability, so the best way to exhibit that is to show that you have multiple stable sources of income. The final indicator mortgage lenders look at is your wealth statement. This statement represents all of your existing or recently acquired assets, any liabilities, and your expenditure across the entire year. In that essence, it tells creditors your actual true income. Bad credit mortgage lenders. If you're struggling to secure a mortgage due to your poor credit history, you might want to consider specialist bad credit mortgages and look for IVA mortgage lenders. Bad credit mortgages are mortgages offered by lenders who specialize in helping people with poor credit histories get approved for a mortgage. These deals may have a limited borrowing amount and higher interest rates, but they can be a good option for those who need to get a mortgage quickly. Instead of searching for bad credit mortgage deals yourself, you can speak with a specialist mortgage broker who can help you find the best deals for your situation. If you're still having trouble securing a mortgage after an IVA, you can get advice from an independent debt charity such as Step Change or Citizens Advice. If you're struggling with debt and haven't yet taken out a debt solution, then an IVA might be right for you, but there are a number of other debt solutions available here in the UK that you could look into. Some are free to use and others include fees, and each will have their own pros and cons. If you want to learn more about the solutions available, then we've created a really great form that you might be interested in checking out. Click the link in the description to get started and answer a few simple multiple choice questions like the total amount of your debt, how many people you owe, your living situation, and we'll connect you with one of our trusted partners so you can find out more and take steps towards improving your financial situation.